What's up, guys? How's everybody doing this morning? What's up, Carmine? You hear me?
Yes, sir. You hear me?
Yeah, gotcha.
Is there an echo?
No echo on my end. Let me know in the chat if there's any echo. This is the first time I've attempted to do this multi-stream from StreamYard here, so seems like it's working.
Sick.
Cool.
Yeah, it's pretty straightforward and simple, I think, actually.
Yeah.
I didn't even know this existed, StreamYard.
Yeah, it's just I use it to stream from to YouTube, and you can stream to multiple things at the same time, so it's handy, and then it records it to their cloud. So yeah, but thanks for joining in today, man. Guys, I think we're just going to go through game plans and analysis. As usual, take some questions. I'll stay on for the live trading session. I'll let Carmine share his screen if he'd like and go through his game plan. If you guys don't know already, if you haven't been a part of it, Carmine runs the Invest to Trade community, and I've been a part of that for a few years. It's very good. I do highly recommend it. So I'll let him talk about that as well. And yeah, just going to get started here and go through the game plan for the day, kind of talk about our analysis. If anybody have any questions about that throughout, just throw it up in the questions in the chat, and I'll take a look. Can you guys see my screen, by the way? It should just be on the bookmap screen, I think, right now.
Yeah.
Okay, cool. I'm just going to pull down Discord to share my game plan here. But going back this morning, kind of difficult and tricky conditions being up here at all-time highs, in my opinion. We've kind of had these tricky conditions all week. But looking at the higher time frames, it's kind of the first thing that I do every morning is just kind of go through relatively blank charts and just get a feel for it. We've been continuing to smoke. Every single dip has been bought and just continuing to grind higher at all-time highs. I was watching the zone yesterday where there was significant selling from last week after we hit this trend line last week. It was a daily trend line. I actually caught shorts off of this last week. However, I was watching for once we broke above to hold as kind of a support or resistance turn support zone. I did attempt that multiple times yesterday. However, unfortunately, just mistimed it, kept getting stopped out for break even and a small loss, but it is what it is. It eventually did work, and we are back up here at all-time highs. But I will say that the pre-market session here so far this morning, since I initially did this analysis, has been pretty heavy. A lot of selling kind of under VWAP here, but we'll see if it continues after the session. One thing that I've been noticing a lot over yesterday into today is just how we've been kind of grinding in channels a little bit, even on the 15-minute time frame. And when I see these kind of conditions, it makes me a little bit wary of spotting reversals. It becomes a little bit tricky, in my opinion, to spot reversals just as we continue to kind of grind in a channel. And if you don't get it early, it makes it difficult once a reversal does come to kind of frame good risk versus reward. So I'm just being aware of that as we go into today. The main game plan from today comes from the volume profile. I'm watching this area of high volume that we've seen the last couple of days. It's been around 67, 62 to 70-ish. If bulls can defend there again this morning, I am looking to take it long, just going back up into the highs. However, if I start to see the heaviness that we've seen in the pre-market here continue, actually, let me pull up a better screenshot now of what we're seeing this morning on the volume profile. So if I see this heaviness continue, especially kind of under 70, 69-ish area, and if I don't see buyers support this pretty quickly here now in the first 30 minutes or so, I'll be looking to see if pop fails, and I don't see much stopping a retest of like 55 to 45 area. However, if they recapture quickly, then I could see us, at least popping back towards 80 to 85. So that's kind of my rough game plan this morning. My approach on Fridays is generally just to have base hit mentality. I like to just be in and out pretty quick. I don't know what's going to happen today. It's a little bit of a tricky day with NFP being canceled. The Gov is voting on budget extensions this afternoon, so it could be a little tricky. But just as a general observation, usually on Fridays, volume and volatility tends to dwindle off the later into the afternoon that it gets. So that is my plan. Let me stop sharing my screen here. We'll see if you can share yours, Carmine, and go through.
Let's see. Everybody see that or no?
I'm not seeing it on my end, but I have to ask the chat. Daniel said yes.
Okay.
Oh, here. Okay, I see it.
You
Maybe
see
I
it?
have to add it. Okay, got it. Yeah.
All right, cool. All right, yeah. So I mean, similar analysis. I mean, on the daily, we're just breaking new all-time highs. The volume is decreasing as we keep breaking out, which is just showing that there's a lack of interest of people buying these highs, which is a good sign of, you know, possible buyers becoming a little exhausted of just every day waking up to a new all-time high, which is a little difficult to, you know, buy. So it's going to be important. I want to implement my two-step process. I don't know. I'm sure a lot of people in here are from InvestiTrade, but two-step process is essentially, and I applied this yesterday. So actually, let's look at yesterday's trade to apply this two-step process. So yesterday, this applies to both the long and the short side of the two-step process. My level was at 67.60 yesterday. My two-step process basically says if we're looking to short the market after a strong uptrend, looking along the market after a strong downtrend where there's a clear sign of a train moving in one direction, it's best to not go against it until the two-step process becomes validated. My two-step process is, number one, let the market sell off, let the market rally, let it go against the trend. The objective here is to not facilitate trade when it makes its first move. The objective is let the market bounce, let it sell off. In yesterday's context, the two-step process was to the downside. So my first objective was letting the market sell off. And then on a sell-off, there's going to be a sign of either new supply, a low volume node, resistance that forms, something that is just indicating that sellers are strong and validating the drop. Yesterday's context, there was a low volume node at like the 70s to 75s. So step number one was the market dropped, low volume node formed. Step number two is letting a retest or a defense of the sellers that caused point number one, which we saw it like 4 or 5 times yesterday at these 68s to 70s, and I rejected, and I actually took a short position off of that low volume node. So the two-step process is as follows. I'm going to draw on my screen here. Is number one, let the market find sellers. Let the market drop. The objective here is to not capitalize on the first downside move. If the trend is obvious, if there's a train moving in one direction, it's not smart to step in front of it. It's smart to let it pass, and then we could get in again when it comes back and revisits where we're at. So point number one, the objective is to not capitalize on that downside or upside move if the market's selling off. Let it sell off, let it rally. It'll leave some type of clue of buyers or sellers. Supply, low volume node, large delta, whatever. The second point is then waiting for a retest of this and these original sellers that were here to defend price. And this is where I'm looking to capitalize is on point number two of the two-step process, not point number one. Because a good example of this is even yesterday, right? Yesterday, the market was selling off. And let's apply the two-step process to the upside. And I know, Matt, you took a bunch of longs yesterday. Once the trend is obvious and there's clear signs of if you're looking to long a rally, every single rally yesterday, let me draw on this screen. Every single rally yesterday failed. So, I mean, if you took, I don't know the exact rallies you took, but if you took this, it failed. this
Yep.
one, this one, this one, this one, this one, this one, this one. Every single rally failed. And I mean, we've barely ever made a higher high. Besides right here, that was the first time we made a higher high. Every other time was a higher low. So
yeah, I tried those first two there. And then as soon as I saw the same thing, how absorption was just laying into every buyers on those pops. And then I stayed away from it until we dipped further into that demand area.
Exactly. So, I mean, after it's not obvious and it's not apparent, like here, it's not obvious yet. But, once we start getting towards like here, and definitely here and here, this is like a scenario where my two-step process would be implemented. But I mean, at this point, it's not implemented. At this point, it's really not even implemented. And then, so this is point number one, is just let the market, or this is not even point number one. This is just to not trade longs. And then watch how this structure changes, right? So we go down to a low, we have a level of demand, we see the elevated volume. Now, if we're looking for longs, it's like, all right, let the market bounce, let it move higher, and we're going to miss the first move. This is the first step of the two-step process, is missing the first move and accepting that we're okay with missing it. Because we can see here, the market finally broke the structure. It hit the demand zone, elevated volume, finally broke this structure, right? Started finally putting in higher highs and started finally putting in higher lows. Finally broke this structure. And then we started using this range right here, continuously putting in higher lows. And then at this point could have been the validation of the two-step process, saying, all right, if there was some type of buying activity here, now it's holding. And this could have been a better entry point versus trying to catch the bottom down here. And then the market rallied from that. The point I'm trying to make here, go ahead.
Oh, sorry. I was going to say that print right there at that low of day was really nice too. And I had thought about catching it because it was kind of that zone that I was watching. But it had dipped under it. But if you go back on Bookmap or a footprint chart, there was a really nice B shape that formed there, and it created a nice 15-minute candle. But I missed it, and then after those pullbacks further up, I just felt like it was now too far away from that being my invalidation point, and it would be a little bit too much of a chase. So I just let it go and ended up missing the setup, even though it finally worked in the afternoon. The
way I look at it too is that, like, if you take 5 attempts at this, if your risk to reward is good, it'll pay on the 5th, 6th attempt. But like, the bounce down here is no different than the bounces earlier. So it's like you keep trying it, you keep taking the small paper cuts. But after 5 or 6 times, you really need to hit a good winner.
Yep. Yeah. I think I took a 1-point loss, and then I took 2 or 3 break evens. And then I think I was on the live stream, and I was like, fool me once. Okay. Fool me twice. Not being fooled again. I see every pop getting sold into. It was one of those.
Right. So, I mean, now even the same could apply to higher time frame. Yesterday the dip was bought up because the market never broke under major support levels. So, I mean, even using that concept on a higher time frame and not even worrying so much about shorter time frames, intraday, the dips are going to continue to be resilient and bought until major support is broken. I mean, every time we go up, new support levels are forming. So it's kind of difficult to say what is the major support level in this market, but that's really not a big concern for us because we're, short-term trading. So we're just really going for, quick fluctuations. So, I mean, as far as today, we have this level of 3-hour demand. It's not the cleanest because this rally really didn't have the strongest continuation, but it is valid. And then also what I like about it is you kind of highlighted this point. It kind of aligns pretty well with the high volume that we have seen the past 2 sessions. Yeah. Another good point to mention is that on trending days, the market likes to revisit where we trade at on those trending days because of all these like peaks and valleys. So we have like this peak, and then we have the valley, then we have the peak, and then we have the valley. And the market likes at some point, fixing this structure and revisiting this. So, I mean, we still, if we were adding yesterday's session, this filled out a little bit right here. Pretty much, this is all filled out now. It's not quite like a path of least resistance like you sometimes talk about, but it is also like if we do get down there, there's not a whole lot to stop kind of a quick drop down unless something new develops. Right. So, I mean, the demand zone 67, 66. So it's something I drew it down to the 56s. So, I mean, it aligns with this. For me, this is my bullish bearish line of the day. I mean, if it breaks, I don't really see why the market wouldn't want to go repair and go transact down here and break onto yesterday's low into the 40s, 36s.
That's pretty much the same as me. Mine was just a little higher, kind of specifically around that high volume area from like 70 to 62, 63. But I think it would be better if we do break lower, kind of like the two-step process that you were just talking about, just to really confirm selling and not, buy into a fake out dip that grinds higher again.
Right. And it's going to be a little bit of a difficult, well, based on this structure, it might not be as easy. And this is kind of where like it's big to gauge what the market does intraday. Like we could plan all we want right now, but maybe the market opens up and there's significant selling volume and the market's just falling off a cliff. So it's hard to predict something like that. But I mean, right now, based on the structure, I mean, even shorting a move in this range from yesterday, I'm not going to say is ideal, but I mean, it's definitely possible. It's just not something that I would love to see or I see often, inside of this middle of the range.
Yeah. Even setting up for this week, though, even if I miss it, I wouldn't mind seeing a nice heavy drop just to set up some better volatility.
For sure.
I forgot to mention, we do have, I think that I know NFP was paused, but I think we still have PMI coming out.
Yeah, PMI's at 9:45 and ISM services at 10 a.m.
Yep, exactly.
Yes, I mean, I have to remain bullish above it and I'll turn bearish below it. I mean, my upside targets, if this holds, is 66.80.
Yeah.
Yesterday's high. And then downside, I mean, I don't see if the selling's strong and we break under the 66s and we kind of like, break it. And then there's some type of pop, kind of like what we saw yesterday. I wouldn't mind trying a short. It's always going to be lower probability in that range, but targeting, the 45s than the 36s.
Yeah, exactly.
So
I think the game plans are pretty aligned today, actually slightly different levels, but there is a good number of people in here that I think have not been an investor trader or heard of it. If you want to kind of talk through what you have going on with Academy, I think people could benefit from that. Yeah.
So recently I started switching and I opened the Discord for Discord only access for those who just wanted the Discord and, access to the plans and access to the commentary with no access to the course or the education, but majority of the education is in the Investor Trade Academy. I can even pull this up here. There's just, there's like over 50 hours of lessons. I mean, in the Academy alone, there's 20 hours and then there's, like another 6 hours. And then we do weekly webinars. Dylan and I, we host 2 weekly webinars. There's a private tab for trade recaps that we post in there that we don't post on YouTube. And it's just constant support and constant, I guess, mentorship, which is in the Academy, which is not found in the Discord only access. There's some good lessons. I know Matt took it and Matt's in it. And I don't know, do you feel like you got a great foundation to your trading from it?
Yeah, definitely. I mean, there's nothing that replaces like putting in your own experience. So like any of these groups that promote like just trying to copy someone else, even if you try to copy me or Carmine exactly, like we can teach you our systems. And I do things extremely similar to Carmine, but I have some of my own nuances and setups and things that I do in the way that I approach the market. But that's just something you have to develop. But I do think having like a core foundation of experience is critical. And I don't personally know of any better place to get that than what you've got going on.
Thank you.
Yeah, of course. Anybody, let me see in the chat here in case anybody's muted. Does anybody have any questions for me or Carmine that you'd like to go through? Technical, anything about groups? If you got any questions about that, if you got anything trading related, let me know. Chris, it really just depends. Carmine has a lot more education stuff going on. If you're a newer trader, most of what I do really focuses on kind of like coaching for a smaller group. but I have a lot of stuff on YouTube that you can check out, and so does Carmine. And I know there's a lot of people that benefit from actually doing both. So an example, Mar asked, can you give an example of absorption?
Yeah, sure.
So I'll kind of talk through a theoretical really quick. So this is from the book, The Studies in Tape Reading. Kind of concept talks about absorption. And if you haven't read that book, I do recommend it. But one kind of comparison that I got from that is when you see an area in the market, especially when it aligns with something like a supply or demand level. And I always say it can flip either way quickly, but I give the analogy often of like holding a sponge under a dripping faucet, right? And you see market orders coming in and just not moving the market in the direction of those buyers or sellers. And that absorption may eventually trigger a reversal when aggressive participants come, like the sponge has absorbed all the drips and the faucet is no longer dripping, or it may become saturated and just break through. And you kind of have to identify that in real time. But as a general rule, there's lots of different tools you can use, footprints, bookmap, etc. But I view absorption and distribution, same thing on the supply side. When you see significant sized market orders, especially over a period of time, not just one, where it fails to move the market lower. And then ideally, if aggressive participants move in the other direction, it can trap them and trigger a short-term reversal.
Yeah, I mean, yesterday, not the clearest sign of absorption, but I mean, yesterday, this was the trade that I took short. So we had the level at 67.70. Yep. And it looks better on the heat map. But I mean, every single time we popped into it, it was met. There was an attempt from buyers, not a significant amount on this example, but it just kept being sold into on like.
So I was on the exact opposite side of this at this moment. You see that candle, exactly there. But I knew I was kind of catching a falling knife, and I knew it was a kind of a fake out setup. When I trade a fake out setup, it's like a right now or right out. And so I caught it, I think around those lows, and immediately trailed my stop loss to break even like twice. And I was up 5 to 8 points, I think 2 or 3 times, and stopped out break even every time.
Yeah, that was tough because I don't know, for me, we were under this low volume node here. So, I mean, until we broke out above that, I mean.
So I was literally just using that low volume node as a target. I was looking for like just 70 to 75, and it came just a few points shy of it. And then, kept cutting me out. But once I saw that absorption there on the flip side and that low volume node holding, that's when I said, okay, killing the idea. But yeah, so in that instance, I was kind of 50-50. Like it looked clear at first, but then you kind of saw the absorption and ping-ponging both directions. And then it became very clear, like as the day went on, just every single pop got sold into until we hit that deeper demand zone.
Right.
Good questions, though. Somebody said they love the investor trade community. I don't know if you can see the chat up here as well.
Pull it up.
If there was one book that you would recommend, what would it be?
I would say the book that every individual trader is going to create, and that's their journal.
I would agree with that. I mean, I talk about that all the time, and that's part of like tracking your own data. For me, like giving you an actual like book, if you really want to read, this is what's on my desk that I read pretty much every day, a little bit, Daily Trading Coach. And then the other one from a technical perspective, it's not like going to give you technical setups, but from a theory and perspective thing, I've based a lot of like the theory behind the setups that I trade, both from things that I've learned in investor trade and from that book, The Studies in Tape Reading, Wyckoff. So,
yeah, I mean, this is a good book right here. Pitbull.
I've never read that.
Yeah. Pretty good book. Marty Schwartz, they call him the Pitbull. He was the best S&P trader, one of the best.
Okay, I've never read that one. I'll have to add that to my. So he was obviously kind of a auction pit trader type thing.
Yeah.
I honestly think that's like some of the most relevant information to how we trade. I loved that that interview, or not interview, but that series on YouTube. I forget. I'm drawing a blank on what it's called.
Floored?
Yeah, floored. Yeah. There wasn't, again, there's so many things that I've learned from trading, like from investor trade, from books and everything, that it's not like I learned directly like how I'm executing my trades from, but there was just like kind of like theory and like learning between the line things that I adapted for myself over time. And I think that is like a meta skill, is just learning kind of to read between the lines and understand like foundational concepts from things that are taught.
Right.
Let's see, options, volatility, pricing was fundamental for me. Pairing that with series knowledge. Process. No, there's not a question there. Let's see, did I miss anybody's questions? Last.
Volume profiles on Sierra.
There's also one on Tradeovate as well. I share that for a lot of beginners because it's just so much easier than Sierra Chart, and I don't really want to be a full-time Sierra Chart help desk. But the Tradeovate one is easy to set up as well. I'll make a video. I actually already made a video on that on YouTube if you guys are interested in Tradeovate.
All right, Matt. I think I'm gonna hop off here because I'm gonna go live soon and invest the trade.
Sounds good, man. Thank you for joining in. Really appreciate you sharing some knowledge with the community here. And hopefully some people will check that out. If you haven't already, I do recommend checking out Investor Trade.
Cool. Thanks. Good luck, everybody. Good luck today.
Alrighty, see you in there.
Peace.
All right, guys, let me put my screens back up here. Yeah, see, Daniel, exactly spot on. Sierra is awesome, very customizable. For me, the big thing I like about Sierra is using it with brokers that just have a little bit lower fees. Tradeovate's fees are also very low. But I just do not recommend Sierra for most people because it is complicated, it's difficult, it's not user-friendly. And Tradeovate has pretty much the same things. And I still use my Tradeovate account, which I can show you guys here. Since I'm sharing my screens now, you guys can see this is a 30-minute chart with the volume profile set up. If you guys want this, I have a video set up on YouTube. I went over the footprint chart. I think I went over the volume profile stuff as well in that. I'll have to review. If not, I'll make another video if you're interested in having a candle chart with the volume profile set up like this. And then here's like footprint charts on Tradeovate. Question is not so simple to answer, but I try. How much do you consider the touched level zone during the night session? I still look at overnight levels and when things are touched in the pre-market. The big thing that I'm looking at is like how much volume was transacted there. Like even if it occurs like in the pre-market or overnight, that's fine. But I look at the volume that was transacted and if it was significant or not, as far as gauging how much I'm going to pay attention to things that occur overnight. Yeah, I'm actually going to be doing in my private kind of coaching group, Flipping Futures, I'm going to be doing a deep dive into trading processes and system and risk management and stuff today in our coaching call after the live stream today. But just really quick, like as a general rule, I look to be very consistent about my dollar amount risk. So say that's like $300 to $400 risk per trade for the month. I do vary that slightly because I've had a lot of experience over the years now, and I can kind of get a good feel for when a trade is one of my A plus trades. I may kind of size into that. And, when conditions are not so great, then I will maybe err towards the lower end of that, maybe like 200 to 300 per risk. So I have a little bit of dynamicness to it, just based on experience. But for the most part, I recommend sticking to a very consistent like risk per trade and max risk per day. Those are like the first two things you have to master as far as risk management. For me, like the max risk per trade per day, like I'm not going to like my average risk per trade. I'll never lose more than 3 trades in a day. Yeah, I do pyramid into winning trades sometimes. If only if we are in very trending conditions on both the higher and lower time frame, and I'm trading with the trend. So, excuse me. So, risk management, profit management, and trade management also have a little bit to do with the type of setup. If I'm trading in a balance range, if I'm trading in a trending range, and if I'm trading a setup that's with a trend or against a trend, or if I'm trading in a balance range. If I'm trading in a balance range, I'm most likely fading highs and lows. I'm not pyramiding into positions, and I'm not scaling out of trades. I'll typically target somewhere around the 50% of the range, and I'll get all in and I'll get all out. If I'm trading, like, say I get an early preemptive entry set up on a breakout, and then the breakout is confirmed, we pull back and hold, then I may pyramid into that and add to that position for that setup and trail my risk. But even when I pyramid into a position, I'm not increasing my risk on the trade because I'll be trailing my stop. So I can only do that when I can really get another good entry and I can define good risk even with that additional position on the trade. Yeah, I count break even as a trade, but I don't really count it against my like daily limit per se, like because like I have a hard loss limit of like 3 losing trades, but I don't really count a break even against that. But that's something that I'm going to be talking about on the coaching call today, is how I kind of navigate all of those situations. No, I do trade NQ sometimes. Someone asked why I trade more ES and not NQ. Just experience. I started trading a lot more ES. And there are times though, especially when volatility is low and there's just better price swings on NQ, that I will trade NQ. And I actually kind of want to expand to start trading NQ a little bit more. But when you're a day trader and a scalper, like being a specialist in something there's something to be said for that. You get to know the market that you trade. It has like a personality, almost like a person, and you get to know the different cycles that it goes through, the different conditions and ranges and behavior and setups and things like that. And especially as a very short-term trader, I think that's extremely important that you have a pretty focused view on things that you trade. But the setups that I trade and look for and levels and the way I approach everything is extremely doable on NQ. It's just a little bit different behavior, a little bit higher volatility and wider swings in price, which is fine. You just account for that in your position size. I traded both options and futures for a long time. I traded options a lot more, and I did start trading futures around the time I got an invested trade in like, I think 2021 or 2022. Futures are tricky, especially index futures. It's one of the biggest markets in the world. It's very liquid. There's a lot of advantages to it, but there's a lot of big players. A lot of the volume is done by high frequency algos and different things that can make it not a extremely beginner friendly market. Anytime you shrink the time horizon that you're looking to execute trades, the greater the difficulty is. A lot of my biggest trades of the year, I still swing trade, I still trade options, and a lot of my biggest money is still made from swing trades. The day trading keeps me active in the market and, you know, keeps making me money. But as I see big setups develop and I take big swings, primarily with options, I have a lot of big hits there and typically bigger profits and bigger win rates and everything. But you know, I only take a couple of those a quarter. So it just doesn't, those really good opportunities just don't come around too often. Like I'm in pretty much just Mag 7 or SPY for those kind of swing trades. Yeah, Emilio asked a good question. Do I still use footprints and stuff? Yes, I still pinpoint entries with order flow tools, and I will look at higher time frame zones and levels, etc. But I'm not like so quick on the trigger. I'll usually have a wider stop that's not necessarily just based on that order flow. It'll be a little bit like different structure and stuff. But I will use that for entry to get kind of the best price entries that I can for my like more positioned swing trades. Yeah, 100%. I've been talking about that a lot. Matthew Graham just said, you know, just to show sometimes no trade is a trade. Yeah, we've seen a lot of conditions lately that I've been talking about in my own group that I do, you know, a lot of coaching and mentorship with. We've been seeing a lot of conditions lately that are very necessitating being patient and just taking no action sometimes. Blair, I went over the game plan already, but I'm mainly looking at this zone from like 62 to 70. We're kind of hitting the top of it right now, which is a zone that I'm watching from the volume profile. And if we hold that, especially here in like the first few minutes, I may look to be a buyer. But this pre-market is looking a little heavy, and we have news coming out at 9:45 and 10 a.m. And I'll be honest, if we cut under these under, you know, the 60 to 70 area on ES, I'm kind of hesitant. To take that long, unless I see something really good form lower. If there's a lot of weakness under 70-ish, then I'll kind of be looking for pops to sell. Looking at Bookmap here, you can just see how we've been kind of selling under VWAP. I mean, this could easily reverse and shoot straight back to all-time highs on the opening bell. But so as long as we're above this zone, I am still looking for dips to buy around 60 to 70. But it's got to be soon. And if we see continued weakness under the 60 to 70 area, I'm not about it. PMI news. PMI news. The large green bubbles are aggressive market buyers. The red bubbles are aggressive market sellers. Certainly recommend paper trading, like while you're getting familiar with, your platform, your tools, you're starting out for a while. But I do, like, as you start to get serious about trading, I do recommend trading extremely small with real capital, because you want to start building not only the technical aspects of trading, but you need to start building your emotional and psychology skill sets as well with trading. A lot of people have the experience of being a star with demo trading, and then when real capital is on the line, they just can't do it because it affects your emotions and things differently, and you need to build that skill at the same time. But anytime anyone's starting out, I always say never put any money in a trading account you can't afford to lose, and never trade big without a good solid experience point and proof that you can make money over time. Like, it doesn't matter how much money you have, you should never be trading for more than like 1 or 2 micro contracts if you're starting out. Like, because you're going to be paying the market to learn, because you're going to lose money, and most people lose money for several years in trading. And so while you're learning, there's no need to make that education expense more expensive than it needs to be. There is a lot of aggressive buying coming in here. Opening bells in 2 minutes. Awesome. Logan said the footprint video is super helpful. He didn't know Tradeovate had those features. Yeah. Tradeovate is a great platform, in my opinion. Like, if I was just on a laptop and I needed like one platform to go to and trade, I use Thinkorswim for my candle charts. I use Bookmap. I use Sierra Chart and Tradeovate. So I have options. But if I was just needing to be minimal, I really like Tradeovate because I can have the footprint chart. I can have volume profile charts that are all really good in one place. And their fees are relatively pretty low. So, and I'm not sponsored by them. I don't have nothing, I have zero financial gain from that. I'm just saying that I personally used Tradeovate for a long time and still do. Yeah, exactly. I said this in our private group call yesterday. What just happened? Most people exhaust their resources and quit before they learn. That's why, like, risk management, number one, is the most paramount thing you have to master starting out in trading. Otherwise, you're not going to survive the game long enough to get good at it. That was loud. So a lot of buying off the get-go here. And unfortunately, this makes it a little tricky because this is that zone where I wanted to buy the dip right here this morning. And we are opening up right in it. And I'm not really comfortable just hitting buy like right in the first 30 seconds of the bell being open. So it's a little tricky for me here. So kind of breaking above VWAP again here now. That might have been a great little dip buy there at 73. Man, it sucks. It sucks that this was like my exact game plan, exact zone. I wanted to be a buyer between like 62 and 69. If you guys saw, we hit just the top of that right at the market open and just popping. Like this was the exact setup that I wanted, and it just was a little untradeable for me happening in like the first 30 seconds to a minute. And my target was going to be kind of the 80s, and we're already kind of shooting straight up into the target. That was a little bit of the morning momentum setup, but it was kind of done in like a bottom reversal type fashion. But you can see in the pre-market, we started to get the buying off that level. You guys remember I talked about in the pre-market that high volume zone that I was watching from like 67.70 to 62 area. And I was looking to buy that dip into there. Started happening in the pre-market. We got a nice double bottom, higher low. Look at how that selling came into that, hit these bids, popped aggressively. Then look at the selling on the second pop down here. Like this is a perfect A+ like bottom reversal confirmation for me. When we bottom into that zone, we see the aggressive buying out of it. And then look how the selling just got weaker on that double touch. Unfortunately, the timing of this occurrence here just made it kind of untradeable for me. I'm not really comfortable jumping into it like a couple minutes before the open, and I'm not really comfortable jumping in it like within 30 seconds of the opening bell. And now we popped already into the 80 level, which was my target. So exact pre-market game plan was to look for a dip there into 67.70 to 62 area, which we hit just the top of that and bounced. So literally, this is my game plan, guys, I shared this at 6:38 a.m. this morning. And this was that zone that I talked about. And this was that possible setup right there. Literally 68, 69 is where I drew the bottom of that arrow, and we ripped right out of it. And that's literally exactly where it worked out perfectly. And unfortunately, the timing just made it very difficult. Post this in my chat here. Yeah, that's just unfortunate. That's just one of those things where it's like, when that happens, it can be very triggering and frustrating, but you can't chase it. You can't just try to reverse it. It's just one of those things. Dang, you know, exact, like literally almost to the point, the setup played, and just the very unfortunate timing of it happening like right at the opening bell. Um, so I mean, unless you're literally watching at the opening bell to click buy, in the first, not even really, because I mean, even if I bought here at the opening bell at 72, my risk would be at least down here under 68. So risking like 4 or 5 points. I mean, yeah, it worked, but it was a total gamble, in my opinion, to buy it there, because there's just such a surge in volatility and volume. It could have just gone either way. So it is what it is. I mean, you can see, I guess the one pro here for you guys is you guys see how Carmine and I this morning came up with the game plan, those levels, specifically talking about understanding where the auction is at, where the volume is at, and just understanding how, this zone where all this volume has been transacted can act as a reversal point. And that's exactly what we got. Or if sellers broke under it, then we could have had that scenario. We did get, but just given the overall context, how we're uptrending, I was first looking to be a buyer on it. And that's exactly what we got. Unfortunate timing is just the only thing that killed it. If it would have just happened, 5 minutes later, I would have been in it for a great trade. But what you can't do is you can't chase it now with bad risk versus reward. You can't try to go against it. That's going to be very low probability, right? So trying to fade all the buying strength at this point would be very low probability, especially being at all-time highs. And also, trying to chase it would be very low risk versus reward opportunity. So yeah, it may keep flying, but we don't have a really good target for that and a good place to frame our risk around. So if you don't have both a good risk versus reward opportunity and a good probability perspective setup, then you just don't have a trade. Yeah, exactly, Blair. The theory is just like the market tried to resist there. A lot of volume was transacted. So a lot of buyers and sellers are represented there that were agreeing on price and then move up away from there. So that was when you see price consolidate there, that's like fair value, right? Call it fair value. Not fair value in the way that things like ICT talks about it, I think, but fair value being like buyers and sellers were agreeing on price, and then we moved up to new prices from there. So when we come back to that fair value, theoretically, if people still have a positive view of the market and they want to be a buyer, that's an opportunity to get at a fair value price. And so they would continue to buy, and that's exactly what we saw. Does that make sense? Let me know if that concept makes sense there about the level and the volume and understanding the auction, because the market is just an auction. Okay. Yeah, glad that makes sense, Blair. So we'll see if pullbacks do occur, especially around VWAP here, where we had this really aggressive buying. Whoa. Oh yeah, we got the news coming out, but that was a little bit preemptive there. The news is coming out in 4 minutes. So that was interesting. Yeah, I missed tariff volatility. Me too. Those were the days a couple months ago. I'm a little bit unsure of what just happened. Maybe somebody got the news early, or they released the news early. That would be something. Or just very very thin tape, and some big boys hit the orders. That is like a complete sweep of the tape, though. You can see, yeah, data must have gotten leaked. That would be my expectation. Somebody knows something, or some other geopolitical news popped off. Let me pull up. I haven't pulled it up yet today, but I typically have First Squawk pulled up to see what just happened. But what I was about to say before I was so rudely interrupted by those massive orders that came in is I am watching this area to be a buyer. If, kind of like Carmine was talking about this morning, if you guys were in here early for our pre-market plans and everything, is kind of one. I am a little bit, so one way that me and Carmine kind of differ in our execution a little bit is I am a little bit quicker to get in bottoms or tops than him, but I'm also much tighter with my risk. So I will take sometimes a little bit more risky trades. And to be fair, I also trade way smaller size than he does. But I'm okay with scalping quicker, smaller moves with very, very minimal risk. But to what he was saying earlier, I think is what we're seeing here is like where I was looking to be a buyer right off this level. If I saw, something like this with extremely small risk, what he was talking about is like waiting for those buyers to show their strength here and then waiting for a pullback into them. And we can see how aggressive this buying was right here from where these swing lows formed. We also have VWAP there, and then waiting for a pullback into them. So that's what he was talking about. And we can see this bid here. And I do trade that way as well. I'm just more, I think I'm a little more open to pinpointing moves a little bit more before they happen. But I think this is a good zone to watch here. We saw these bids popped up. They did pull, so I'm not seeing it there anymore. We have news coming out in 1 minute, so let's watch what happens. But I think that may have already been the news for a lot of big orders. Somebody already knew something. We do have more news coming out at 10 a.m. So this was the 9:45 is the services PMI, and then we have the ISM manufacturing PMI at 10 a.m. So slightly different, but both can have a high impact on the market. That was you, Eric. You came in with a couple $1 billion there. I don't know how much that, I mean, we could do the math based on the volume that was transacted here, but that's big money to make a move like that. So if no pullback occurs and we just keep squeezing into the highs here, I'll be honest with you guys, I don't have much of a plan for that, and it could be a cash day on my end. Got a quick scalp from 80 to 85. Nice. Yeah, it's interesting how we held right at VWAP here, which was also like right in this area at the top of that area where buyers were really aggressive. And the pre-market, you can see how we were just holding under VWAP, selling. And then we came into that zone that I was talking about, that with that high volume, 62 to 70, I think I specifically called out, dipped just into that and ripped right off the open. And now on that rip, we smoked back above VWAP, and we just came back and retested it to almost to the tick and bounced off it there. So I don't use VWAP as like a level to trade. It's just a kind of a general observation of where the market is at. So I wouldn't have been a buyer here just because of VWAP. Like, I don't trade like that, but just keeping that in mind, that it also aligns with this area where we saw buying was very aggressive. Again, I personally didn't buy it there because we saw this crazy weird activity and news was coming out in minutes. So kind of similar to exactly what I talked about at the opening bell, I couldn't really take a setup like that. This one happened, 2 or 3 minutes before the news came out, and that made that one a no-go. I'm not going to enter a trade to buy the dip like 2 or 3 minutes before high impact news comes out. So you can do that and make money once in a while. You can also lose a lot more than you expect really fast. So it's a coin flip. No, I'm not looking for any shorts at all-time highs here. Trades by Luke asked, no short option on the all-time high. No, not me, sir. I will not touch that fire. You can make money on it when you do catch top and it reverses, but the problem is when you trade like that, you end up taking so many losses that you need to catch that big hit top reversal just to get back to even, because you've taken so many small losses trying to catch that. It's just not a good business plan, in my opinion. If you have something specific that you trade that you look for, then by all means. I'm just saying for me personally. I talked about, I think in my group, flipping futures, where I do this live trading every day and coaching and everything. I talked about this a little while ago, I think, when we were trading at all-time highs. And I think the quote that came out of that was, don't be a moth, like a moth, just like going back to a flame again and again, just getting torched. Don't be a moth. So what are you guys watching? Are you guys all watching ES as well? You see any other setups? Curious in the chat, what setups are you guys looking for? Do you have any other analysis than what I've shared? Let the group know. Curious what everybody's watching here. I personally, I don't have a setup at this price and location, but maybe somebody else does. Share the VWAP settings on Bookmap. Yeah. So you can see all the things that I have added on here, but here's VWAP. Yeah, I was wanting a slightly deeper pullback as well, Chris. I was looking at the same thing, and I also didn't really want it like a couple minutes before the news. So it is what it is. But I think what was super valuable is just talking about, because it did play out perfectly. Unfortunately, the timing made it a no trade for me. But I think if you guys do rewatch this, because this recording will be shared, going through the analysis and the approach of how to come up with that setup, how to come up with that game plan, and then the confirmation. For me, this was ideal. Seeing the drop into here on the selling, aggressive buying, popping out of that zone, and then the weaker selling on the pullback. It just that was to me, that was A plus right there. And it's just unfortunate it happened a couple minutes before the open, and we didn't get a pullback in there off the open. We just ripped right away like a rocket. So the timing made it a no trade for me, but the analysis, the game plan, and the setup and the confirmation was great. Does everybody, does the setup and the analysis and the confirmation and things that I talked about there make sense for everybody? And if you guys are in the flipping futures community, you can let me know on the Discord chat as well, because I am looking at that as well, if you guys want to talk in there. Okay, cool. So like I said, even if I'm not, like, I share trades live and everything, it's not for the purpose of giving signals. I try to teach and coach through it. But even if, I don't take a trade on it, I try to share the analysis and stuff in real time so you can learn in real time how to analyze the order flow, how to analyze the market auction, how to analyze key levels of supply and demand and all that kind of stuff. Because that's really the purpose of me doing this here, is not to just be like, oh, look at this cool trade I took. No, I mean, that's thanks, but that's not super helpful for anyone else. Yeah, I mean, honestly, Chris, if a P shape does form, it's not so meaningful to me just being up here at all-time highs. Like, yeah, you could try to scalp it for a dip back into this low volume node. Just it's not an ideal setup for me. Keep in mind, we have more news coming out at 10 a.m., the manufacturing PMI news now. Tesla getting shaken behind the woodshed. I was in a Tesla swing trade from earlier. I've scaled out like 99% of the position now, but I'm still up about like 100% on shares. Getting taken behind the woodshed. I haven't heard that in a long time, Chris. Thanks for that. Oh yeah, they are. So I was up 100% on my shares. Now I'm only up 87% from earlier. I took a pretty large swing trade I was in at an average cost of 234. But I've already scaled out most of the position. Yeah, that was a big dip buy on Tesla. What's up, Antonin? So we'll see if we get a little bit of a dip down here. We do have 1 minute till news now. So it seems like I don't know if you guys are noticing the trend here, but every time we get to like a level that is like we want to take a trade off of, it's like a minute before or right at during a news release, like right at the opening bell, right at 9:45, right at 10. Have you guys noticed that so far this morning? Like every time. And I personally just do not look to like within a minute, a couple minutes before or a couple minutes after, I don't look to get in trades around higher impact news like that. Yeah, look at that again. Like I want to trade, but I'm not comfortable getting in when this kind of stuff is going on. Look at that dip right into that zone though. It's moving quick. Right into that zone. See if it gets a little bit more pullback. Maybe an opportunity to get in it. I'll just be in with very small size. One, like probably just one contract because I'm not comfortable putting on size and potentially high volatility. See if we get this, if bids appear here or not. There is some bids popping in here. We'll see if it smokes through them or if it holds. Coming back towards that 70 level from this morning. Selling is staying a little heavy in here, but I'm watching this closely to see if buying comes in aggressively. I like that bid coming in there. More bid coming in. We'll see if it holds or if it dumps. It's kind of a battle here. One thing we could possibly watch for if it does break through this is if it breaks the low of day and fails to continue lower and recaptures. Because we're continuing to see pretty heavy selling coming into this area. So we'll see if that actually has follow through, or if that kind of dips to the bottom of this zone, flushes everybody out that got long earlier, and then bounces. There is some aggressive buying coming in now. We'll see if it gets sold into or if it holds this. Watching to see if this little pullback holds this low here, if we can't get under 72, or if it keeps flushing through. All right. I'm watching this right here. I may take a long here around 75, 76 if I see some aggressive buying come in. And I would stop under the 72, 75 probably. But I want to see a little more aggressive buying coming in. I do like how this bid is appearing. It's just there's not much larger buying coming in just yet. All right, I do like that. I'm going to take a stab at this again, just very minimal size here at 75, and just to stop 2 points lower under this like 72 3/4. I do like how we had this aggressive selling into this zone. And then I like how he pulled back one time here with this weaker selling, similar to what we saw in the pre-market this morning. And so I'm going to go with it. But again, I have a tighter stop just under that 73-ish area, and I'm going to probably trail it to break even pretty fast. I want to see that when I get a really sharp like entry near those lows like that, I kind of want to see it go like right away. Like I talked about this morning with Carmine, when I catch a dip like that, I look to be like right now or right out. And if it comes and sweeps below my entry, I'm comfortable getting back in again at a better price. We're getting the large aggressive buying coming in now. So if I'm right and this was the low down here, I want to see that squeeze these sellers that sold into this zone. And I don't want to see this pop fail. And if the pop fails, then it could kind of switch over to what we saw yesterday, where we just kind of grinded lower and pops got sold into. You don't want to see this pop get sold into at VWAP here. We want to see this go. Yeah, I don't love that. Don't love that. All right, took it off for about 2 ticks there. I'll watch to get back in if I see aggressive buying there. Oh, I like that. Where did I get filled? So I'm back in with that aggressive buying there, just a tick or 2 higher. And again, very small stop loss now under this selling. I want to see that selling get trapped. I'm literally only risking a couple ticks now. Right now or right out. We're still holding that zone that I was talking about over here. Sorry, I'm not looking at the chat. I'm like literally watching this price on the order flow by the tick as it comes in, guys. Again, if this gets sold into, I'm going to go right back out for break even now, probably around 75 and a tick. It's got to be right now, really aggressive buying, trap these sellers in this zone. Let's go back to the highs. Otherwise, I'm out. So I'm already up like 4 points here. So I'm not going to get chopped up here. Either we go and buyers have the gas, or I'm just going to get out and be break even. Very similar to what happened yesterday, but we saw the same kind of setup on the dip form there yesterday. We'll see if buyers can continue to step on the gas here or not. Man, is this going to fail again and get me out break even again? This is kind of exactly what happened yesterday when I tried to catch that and got out break even multiple times. So I'm in at 75. I'm stopping at 75. I'm not going to hold this for a loss now. I want to see buyers come in and put their foot on the gas. And if we can't get over VWAP here, because really this is a very preemptive entry, guys. And the better entry and better confirmation is like what Carmine said, looking for the large aggressive buying to come in and then long a pullback into it. I'm getting in very early here with very minimal risk and just going break even right away. And if it doesn't work, then that's fine. I have no risk on because my stop loss is break even. But I'm just speculating that if this shoots, we might not get that pullback and it might just rip right back up to the highs. Given how large and aggressive the selling was into that zone, I'm just getting in here a bit speculatively because I'm just getting the vibe that if this thing rips after trapping those sellers, like we already know the buyers are aggressive here. We already know the buyers are aggressive here. Now we saw this aggressive selling. Like look how large the selling was, and the brakes got absolutely put on there. So that was my confirmation reasoning for getting in here, is just how large the selling was into that zone, and the brakes just got put on. And then when we tried to dip again, the selling got weaker. So yeah, I don't see more. When I got in, I didn't see too much aggressive buying coming in yet, but I'm just speculating because of the zone, knowing buyers were aggressive there and the sellers are being absorbed. If they fail to break that down, then we're going to rip. And if we don't, that's fine. It was minimal risk. And now I'll just get out break even. So the zone on Bookmap I drew is just where this buying was super aggressive off the open here. And we kind of held these lows, and it was around VWAP. You can see how aggressive the buying was here off the open. So it's a combination of order flow zone and just the fact that that was the opening price and buyers wanted to buy there a lot. But if this comes back on me now, back into the 75s, I'm just going to be out for break even again. Because the way I'm confirming this with the trapped selling into this zone, I need to see, like, the real confirmation now is to see the aggressive buying come in and trap these sellers. And if it doesn't, then I'm just wrong, and I'm just going to take the break even. We already popped to 81.5, so I was already up 6 points. Kind of similar to yesterday. I was up like 5 to 8 points, like 3 different times yesterday. But risk was managed, and I didn't take a big loss. I took a couple break evens, and I called it. Now let's see if we can catch it today. I would love to just see a pop back up into like the 85s into the highs of day. But we'll see. I don't love how slow and choppy this is, to be honest with you. I would have liked to see like more aggressive continuation from buyers right away. And I may go ahead and take a partial profit here because I am in with 2 contracts on that. Nice shoot up there. All right, I'm out half there at 82.5. I'm out half. So now this is the situation I love to be in, where I take a partial, I'm green on the day no matter what, and we'll see if we go break out the highs into the all-time highs, and let's let it run. So it's a small green day or it's a big green day, and there's nothing I can do to control that. Actually, the best thing I can do is take my hands off and go putt some golf balls. Let me know in the chat if you guys have any questions about that. Did that answer your question, JWR, about the zone that I was watching there? I have a little putting green in my office. So when I'm just setting my orders and letting a trade go like this, then I just putt some golf balls. See any questions? Guitar is a good one too. Guitar, putt some golf balls. Patience is figuring out what to do in the meantime. So don't overmanage something. Just let the probabilities play out. This one may come and get my runner out for break even. That's okay. The next one may pay 20, 30 points on it. Did you guys see what I was watching there to get in that? Did that make sense? I was super focused, so I may not have been talking through it as much. But did you guys see what I was seeing there? Like how the brakes got put on the selling in that zone we were watching, and then I saw that weaker selling on the pullback. Did that all make sense to everybody? So we already popped into the 80s, which again, was the same target from this morning. And that is kind of why I scaled out there at the 82s for 7 points. Again, I was only risking about 2 points. So it's already a valid 7 points on 2 points of risk was already the first one I took off break even. I think I took it off actually for like minus a tick. So it's already 3.5 R on that trade. So even if I just went out all out here, that's a totally valid business plan. 3.5 R trade scalp in a couple minutes. But just given the fact that we're at all-time highs, I'm just going to see if it runs back into the all-time highs, and then I'll just trail my stop. Yeah, Eric. Bingo. Are you in Flipping Futures group? These are the kind of setups that I talk about all the time in there. Come on, buyers, do more buying. So like the point of how I trade like this and scalp like this is I'm like understanding where the auction is at. And like as a scalper, as a trader, you need other aggressive participants to come in after you enter a trade to make price move in your direction. So I'm getting in very sharply, speculating that as this bounces, more buyers are going to want to buy. It's going to, for one, stop out people that shorted into that level, which will then have to be buyers. And then two, a lot of, every Tom, Dick, and Harry person out there that's watching a candle chart is seeing the candle chart bounce off the level, and now they're longing it. So I need all of those people to come in and buy after me to lift price up into my targets. This is super slow and grindy, and it's not making me feel good. So the entry and the zone and everything was good. I'm just seeing a lot of slowness and sluggishness into how price is lifting here, which is making me not love it. But I'm doing my best to just be patient and not overmanage it. But what is kind of making me want to just take it off is the fact that it's already up 3R and we're just not getting good continuation from here. But I don't know. I'm just trying to stick to the plan of what I said I was going to do, which was let it run into the highs. But maybe sometime in the distant future, JWRFX asked if I think AI will take over trading. I think it's just a little too dynamic. There are too many different factors that are too unpredictable, especially with humans. But then again, humans do have a lot of repeatable patterns, and they are very predictable. So, I mean, there's already lots of AI trading and everything, but yeah, regulations is another aspect of it. Man, buyers need to hold this and go. I don't like how we're just like kind of balancing on a knife blade here. Like when my best trades, when I get in it, right? And an imbalance occurs right after my entry where price just really moves in one direction. And when it starts to do that and then it just balances is not ideal for me. Because for me, I'm often trading at imbalance points in the market so I can capitalize on that imbalance as it moves from place to place. So I really don't love how we're just stalling here, but I'm just trying to stick with it. When using the bubble map to evaluate selling, there we go. Here's a nice pop. Let's see if we can run into these highs. Sorry. When using a bubble map to evaluate selling and buying weakening, what time frame are you usually watching at? I'm constantly adjusting it. This is a question I get often. As I'm in a trade like I'm in now, you guys can see how I'm a little bit more zoomed in. I'm not trying to overanalyze every tick, but when I'm super in the zone for my entry, I'm a lot more narrowed in, maybe like the 5 to 1 minute, sometimes even like 30-second interval here. But I'm generally playing around with it, and it really just kind of depends on the volatility that's in the market and the price swings to what makes sense. But you can go back and replay this where I took that trade, and you can see how I really honed in and zeroed in when I was looking at my entry. And then after I'm in and I'm kind of setting my orders, then I'm just kind of giving up control a little bit and just letting the probabilities play out. So I'm very, very dynamic and watching it when I'm in my entries. But then after that, I kind of try to just take my hands off. I will manage things manually sometimes if significant things occur, but I try to just kind of give up control a little bit and understand like I'm not going to over analyze every tick in price. And there's going to be some that go all the way to my final targets. There's going to be some that go to my first targets and come back. And there's going to be some that just stop me out right away. So here we are, we're rallying back up into the highs. I'm up about 13 points almost. So I'm going to be taking this off here if we get a nice break into the highs. Hopefully it keeps going. It doesn't reverse on me here now. I like the buying momentum coming in here. So really want to see that continue now. Unfortunately, I was talking right there. We didn't, we came a tick away from breaking the high. I mean, the next big like whole number thing, if we go trend into all-time highs again, would be maybe that 6,800. But if we don't, then I'm just looking at the 15-minute chart. If we don't like break these highs here, then it could just be a pretty choppy day. Like I'm looking at this now and look at the wick. So if we don't take out the highs and trend higher and we drop back into my entry, then it could just be a choppy day. I don't love how the buying is fizzling here at the highs though. Which intraday zone are you talking about? Why not detail asked if I can go over the intraday zone that formed in the context. Are you talking about where I took the entry? I was just targeting like one like nice breakout squeeze above the high a day into all-time highs. And it came one tick away. So I would love to see it go do that. See all this liquidity built up here at the highs on the heat map. If we can just go sweep into that into the 90s, that would be super awesome. Just a few points. Here comes some buying. I don't really want to see this fail. Yeah, I'll circle back when I close this trade. Why not? Because I'm watching this order flow here. Because I'm getting ready to close this position. Go. Come on, buyers, buy it up, buy it up, buy it up, so I can sell to you. There we go. There we go. Come on. Go. I'm just looking for like one quick pop into the high where all those orders are. Come on, don't fizzle. All right, I'm all out there. I'm not going to push it. I'm out at 88, so like 13 points. I was up 14 and it just fizzled. And I don't really want to sit in a failed high of day breakout up 13, 14 points. I was hoping for like one more aggressive surge into these orders here. But when we hit this offer here, it just stalled. See how the buying just kind of stalled there? I said, okay, do I want to be so stubborn that we already broke the highs, which was my target. And I was just holding to see if we got a quick pop into the 90s. So I held, and I got filled at 88. So I was up, it was at 89. So I gave back a point. So the high of day was at 88.25. So I got out at my target, which was a high of day. I was hoping for a quick shot up into the 90s for a couple bonus points. But when it just kind of stalled here at these offers, I took it off. It may keep going, but given the fact that I'm already up 13, 14 points on a 2-point risk scalp, I'm just going to call it there. So let's circle back for why not detail, and I will go over the zone for you. So I risked 2 points. I think my first scale out was for 7 points. My second scale out was like 13 points. So the first scale out was 3R. The second scale out was 6.5R. So 3 to 6, what's that? Like 4 or 5R overall on the setup. That's what you have to think about. Everything in trading is just probability and risk versus reward. So here we go. Now it got me out at my target because it stalled, and now it's going to go break into the highs. So whatever. Hopefully you guys saw the zone. So what did we see here? So similar to what Carmine talked about this morning is, first, I was looking to be a buyer off this level. It happened right at the market open. Okay. So I saw the same. So this entry pattern here on Bookmap is the exact same one I just used here. And now here we go, breaking out into the 90s. Hopefully somebody's caught this and is still in it. So it was the exact same entry pattern, just using a slightly different level. So I wanted to catch it in this zone here that I talked about from the pre-market, which was around 69.70. It happened right at the opening bell, so I didn't catch it. So I had a new zone here, which is where all this really large aggressive buying came in at the 9:30 open. I wasn't comfortable chasing it. Instead, I waited for a pullback after the news. Okay. So after the news, we got a pullback into the zone where all this aggressive buying was on the open, and all this selling, all this aggressive selling came into that zone, and passive buyers just completely put the brakes on it. See how all this large aggressive selling came into that zone and the brakes just got put on it. So remember in the pre-market, if you guys were here for the whole stream, I talked about absorption. When we see a lot of large aggressive selling in a key area where we already know there are aggressive buyers here, now there are passive buyers here absorbing them. Then I started to see aggressive buying come in, and then I saw this weak selling. So now I'm saying, okay, all these sellers got absorbed. Aggressive buying is starting to come in, and now there's weaker selling on the pullback. So what does that tell me? A lot of aggressive sellers just got absorbed. Now when we try to pull back again, the sellers are weaker. So there's less sellers. So that to me is an early signal that sellers are running out of gas. And I'm getting in very early because I know it's a zone where there's aggressive buyers, speculating that if sellers ran out of gas here at this key spot where there was aggressive buying, and aggressive buying comes back in, it's going to it's going to cause a short squeeze for everybody that's shorted into that zone. They're going to have to cover their position. So they're going to have to be a buyer. And then everybody that's looking at a candle chart that sees the zone start to bounce is going to chase into it long. And so they're going to fuel a very quick rally back into the highs, which I'm going to capitalize on with a scalp. And it may keep trending here at all-time highs. I don't know. It may or may not. I got my piece, I got my target, and I'm good. So that was why I had the zone. I saw the aggressive selling fail. I saw weaker selling come in. So I got in around 75, speculating. And then I took a partial up here for around 7 points at 82 on this aggressive buying, because this is where we kind of peaked the last high and this aggressive selling came in. So I said, okay, let me take a partial profit here in case this pop fails, because that happened to me like 3 or 4 times yesterday. So I took a partial profit. I was already up over 3 times what I was risking. And then I had my stop loss trailed to break even. So it was like, okay, either it's a small green day or it's a big green day. But either way, it's a green day. That's how I'm managing the risk on this trade. And then we did get the continuation. Buyers continued to come in. We broke the highs. I just waited for it to slow down as soon as we broke the highs, and I got out. So, we are continuing now. You could say, well, why didn't you just hold? Because this was my target and I started to see it fail. So I was at my second target and I started to see it slow down. What if this was a high a day fake out and now we swept all the way back out into my entry? How would I feel if I just gave back 13 or 14 points on a 2-point risk after we hit my target? Probably would not feel very good. Do I feel great seeing it continue to go without me? No, but guess what? You don't catch all of every single move. That's not trading. Like that. If that's your mental expectation with trading, is that you catch the absolute bottom, the absolute top of every move, you're going to have a very hard time trading. So does the full setup and everything make sense for everybody? If you guys want to see analysis like this every single day, I run a private trading community called Flipping Futures, where I trade live and do coaching and mentorship on how to analyze the markets, how to read the order flow, all the stuff that we're doing here, but even in more in-depth. And so Xavier asked, curious about the coaching. The coaching aspect is kind of like what I do during the live streams every day. For the group, I don't do like one-on-one coaching because it would be extremely expensive for everyone just for my time, and I just don't have enough time in the day. So I kind of coach like I'm doing here, but I go more in depth every single day. And I also do once or twice a week, we do calls outside of the live trading where we go over back testing, setups, psychology, all different kind of stuff. And we're about to have one right after this live stream with the private group. We're going to have a coaching call today. So if you join now, you can be a part of that. But if not, it's all good. My goal is to continue to provide value for you guys here for free on YouTube and on Instagram. And so if you just want to join me there, that's all good too. So my goal is to help people out either way. But if you do want like a lot more in-depth analysis and, daily like coaching and everything like that, then I would recommend it. And I also recommend, if you're newer or not, exactly like Carmine was on here talking about InvestiTrade this morning, and a lot of people are in there too. And I do recommend that. He's got a really good in-depth course and everything. And so I also recommend that for everyone as well, regardless of whether you join me or join there or join both. Highly recommend it. Does that answer your question, Xavier? Yeah, why not? I'll cover that briefly, where I came up with that level. I went over it in depth in the pre-market analysis, so I would recommend checking out the recording here, but let me pull up Discord. Apologies for a minute, guys. Let me pull up my pre-market game plan that I shared with the group. And so in the pre-market game plan, this was shared at like 6:30 a.m. this morning. I said I was watching this zone where all this high volume had transacted. And so I was watching if we dip into there, if buyers support it, or if we break under there, if sellers defend it and then we break down. But I was first looking to be a buyer on it because we're uptrending, we're at all-time highs. So this zone that I drew, if you see, was right around 72, 68 to 64, that whole area. But the top of it was right around 67.70, 67.68, which is exactly where we got that dip and bounced. No coincidence. It was because of price and volume and order flow and understanding the market auction. Thanks, Ben. Appreciate that, brother. Have a great weekend, Graham. All right, guys, if you have any other questions, I look at low volume nodes as well. That's another type. I look at high volume areas, and when the market rallies aggressively and forms a low volume area, that is also telling to me that is what we saw intraday today. So we had that consolidation area that I was watching, that basing area that we bounced out of, and then intraday we formed a low volume area where buying was super aggressive, and that's where I took the entry off of today. So both are important and both have meaning, and you have to understand the auction and how to trade around it. Great question, so thank you. All right, guys, I'm going to wrap up the stream there. Again, we have a live coaching call with the Flipping Futures community that I will be live with. I do the lives typically on Fridays on YouTube. So look for that. If you want to see like the most frequent updates from me, I recommend checking out Instagram. Again, the link for Carmine's as well is in the YouTube description below. So if you're interested in InvestiTrade, you're interested in checking out what Carmine shares as well, check that out in the description of the video below. And we'll see you guys next week. If you guys have any questions, I'm usually very responsive to send me a DM on Instagram, or obviously, you know, if you're in the Flipping Futures community, you pretty much have almost 24/7 access to ask me questions and things like that. Blair asked one last question. How do you determine what large buying is? And the answer to that is it's relative. It's relative to what has currently been going on in the market. So when I see an outlier in the data, like significantly larger selling or buying, like zooming out, right? Look at today. What is an outlier? This selling that failed to break down the zone was an outlier. Look how much larger that you can just easily see, just zooming way out on the day on Bookmap, that immediately we can tell this was an outlier. All of this large aggressive selling in this key zone that we are already watching that failed to break down. Does that make sense? So it's relative, it depends, and you get better in tune with it with experience. And it depends. But the answer is it's relative to like what is currently going on in the market. What is exceptionally large or small from the current market auction. No, I'm not looking at like a minimum lot size or anything like that. All right, great questions, guys. Going to wrap up the stream here. Like I said, we do have that live call with Flipping Futures here in just a few minutes. And I do recommend, if you do have any other questions after this ends, you could rewatch it. We went over a lot of stuff in depth all the way from the pre-market up until now. We've been on since like 8:45 this morning. And so definitely recommend rewatching it. And also, if you have any questions about it after that, send me a DM on Instagram. But thanks for joining in, everybody. Appreciate you. And I'll see you next time. Peace.